It's Tuesday morning. Margaret, a 68-year-old retired teacher from Ohio, opens her email. There's a letter from her insurance company. Her hands are shaking as she reads it. Your Medigap plan rates are increasing by 32% next month. She reads it again and again. $200 a month has suddenly become $264. Her husband is watching television in the next room. He doesn't know yet. She closes the email. She thinks, can they do this? Am I losing my coverage? What happens if I can't afford it? If you're watching this video, you might be facing the same fear right now. My name is Milena. I'm a senior policy analyst. For the last 12 years, I've helped retirees like Margaret understand the rules that protect or threaten their retirement security. I've worked with the Medicare Rights Center. I've reviewed thousands of policy documents. I've watched seniors lose thousands of dollars because they didn't know one single rule. Today, I'm going to tell you something that Medicare and insurance companies don't want you to know clearly. There is a 6-month window. It exists right now. And if you miss it, you could be denied coverage or charged 20 to 100% more for the rest of your life. But here's the good news. You don't have to miss it. And I'm going to show you exactly how to protect yourself. Stay until the end of this video. I'm going to reveal the hidden mistake that costs seniors up to $50,000 in out-of-pocket costs. And I'm going to give you 3 exact steps to never let this happen to you. Let me tell you about Robert. Robert was 67 years old. He had worked for 42 years as an engineer. He retired in early 2024. Everything felt good. He enrolled in Medicare Part A and Part B when he turned 65. He also signed up for a Medigap plan, specifically Plan G. This is the most popular supplemental plan. His Medigap plan was good. It covered things that Medicare doesn't. His co-payments were low. His premiums were around $170 a month. For Robert, this was affordable. But then, in mid-2024, Robert decided to switch insurance companies. Why? He heard from a neighbor that another company had cheaper rates, so Robert called his current Medigap insurance company and asked to cancel his plan. They canceled it. 2 weeks later, Robert signed up with a new insurance company for a new Medigap plan. But here's what Robert didn't know. When you cancel a Medigap policy, you lose something very important. You lose your automatic right to get approved for a new Medigap plan without the insurance company asking you medical questions. This right is called guaranteed issue. It only lasts for 6 months from when you first enroll in Medicare Part B. Robert had already used up most of his 6-month window. He had only 2 months left. When he switched plans, he stepped outside that window. The new insurance company reviewed his medical history. Robert had type 2 diabetes. He also had high blood pressure. He had some arthritis in his knees. The insurance company approved him. But they didn't give him the same rate as other 67-year-olds. They charged him $280 a month instead of $170. That's an extra $110 a month. 1 to 320 a year. Robert tried to appeal. He called Medicare. He called the state insurance department, but the rules were against him. He had stepped outside his 6-month window. He no longer had guaranteed issue rights, and now, for the rest of his life, Robert will pay higher premiums because he didn't know about the trap. He had no idea that after 6 months, the rules changed completely. Milena. Robert's story is real. I've seen it happen to hundreds of seniors, and it's preventable. But first, you need to understand the actual rule. Let me break down exactly what the federal government says. According to Medicare.gov and the Centers for Medicare and Medicaid Services, CMS, there are specific rules about Medigap plans. The rule. Number 1, the 6-month guaranteed issue. Period. When you enroll in Medicare Part B and you're 65 years old or older, you automatically get a 6-month period where insurance companies must sell you any Medigap plan. During this window, insurance companies cannot reject you, charge you more, ask you medical questions, exclude pre-existing conditions. This is federal law. It has been law since 1992. The regulation is 42 CFR Section 417.478. It guarantees this right. The rule number 2. After 6 months, everything changes. Once your 6-month window closes, you lose the automatic protection. Now, insurance companies can ask you detailed medical questions, review your entire medical history, charge you 20 to 100% more based on your health, deny you coverage entirely, require waiting periods before covering your pre-existing conditions. The rule number 3. There are some state exceptions. Certain states have created additional protections. These are called birthday rules. Connecticut, Massachusetts, and New York allow you to switch Medigap plans at any time without medical underwriting. In these states, you are protected for life. A few other states, like Maine, Oregon, California, Kentucky, and Maryland, allow you to switch plans during a window around your birthday each year. But if you live in most states, once your 6 months end, you have no automatic right to switch or change plans without medical review. The rule number 4. The real 2026 crisis is not about rejections, it's about premiums. Now, here's where I need to tell you the truth that the video title doesn't tell you. In 2026, insurance companies are not rejecting seniors. That's not the crisis. The real crisis is premiums are rising 30 to 40%. In some cases, 100%. We have documented cases where 67-year-old's plan, G premium, went from $200 to $400 per month. That's double. Plan N premium went from $112 to $168 in 1 year, a 50% jump. In Indiana, seniors report plans jumping from $137 to $180 in a single year. Why is this happening? 3 reasons. Reason 1, medical inflation. Healthcare costs are rising faster than Social Security increases. Doctors, hospitals, and specialists are charging more. Seniors are using more healthcare as they age. Every claim costs more. Reason 2, aging population. The baby boomer generation is retiring. Millions of new seniors are enrolling in Medicare every single month. Insurance companies now have sicker, older populations. Reason 3, loss ratios are unsustainable. A loss ratio is how much money an insurance company pays out in claims compared to premiums they collect. Healthy loss ratios are 80 to 85%, but some Medigap plans now have loss ratios of 95%, 98%, over 100%, meaning they lose money on every policy. When loss ratios get this high, state insurance commissioners approve massive rate increases. The real trap for seniors in 2026. The trap is not the April deadline. The trap is this. If you are within your 6-month Medigap open enrollment period right now, you can switch to a cheaper plan without the insurance company asking medical questions. But if you miss that window and premiums rise next year, you will be stuck. You cannot switch plans. The new insurance company will ask medical questions. They will charge you more, and the expensive plan you're on will become even more expensive. You'll be trapped. This is happening to Margaret right now. Margaret is 68. She enrolled in Medicare at 65. Her 6-month window closed 3 years ago. Now her Medigap plan is rising from $200 to $264 a month. She cannot switch to a cheaper plan because she is outside her window. The insurance company will ask about her high cholesterol, her doctor's visits, her prescriptions, and they will say no, or they will charge her even more. That's the trap. So here's what you do. 3 exact steps, write these down. Step 1, check if you're still in your 6-month Medigap open enrollment window. Go to medicare.gov right now, not later today, right now. You need to find the exact date you enrolled in Medicare Part B. If you enrolled in January 2024, your window closed in June 2024. If you enrolled in July 2025, your window closes in December 2025. If you enrolled in January 2026, your window is open until June 2026. You need to know this date. Write it down. If you are still within the window, you have automatic guaranteed issue rights. If you've already passed the window, you need to know this too, because you need a different strategy. Step 2. Understand your state's protections. Call your state health insurance assistance program. They are called SHIP. The national hotline is 1-877-839-2675. Tell them, I want to know if my state has a birthday rule or additional Medigap protections. This is free. There is no cost. This is a government program designed to help you. Write down everything they tell you. Some states have birthday rules. Some states have no additional protections. You need to know which state you live in and what that state offers. For example, if you live in New York, you can switch Medigap plans at any time. You are protected for life. If you live in Maine, you can switch plans once a year during a specific month. If you live in Ohio, you have no additional protections beyond federal law. Your 6 months are everything. Step 3. If you're within your window, act now. If you're outside your window, know your options. If you are still within your 6-month window, contact at least 3 insurance companies. Call them directly. Ask for quotes for all Medigap plans in your area. Compare prices. Some companies offer the same Plan G at very different prices. One company might charge $170 a month for Plan G. Another might charge $195. That's a $300 a year difference. Once you have the quotes, apply with the cheapest company. Submit your application in writing. Keep a copy. You want documentation that you applied within your 6-month window. You want proof. If you are outside your 6-month window, do not panic. You have options. They're just different. Option 1, contact your state health insurance assistance program. Again, ask specifically, do I have any guaranteed issue rights based on my situation? There are specific situations where you get another window even after 6 months. If you lose employer group health insurance, you have 63 days to apply. If your Medicare Advantage plan leaves your area, if you switch from Medicare Advantage back to original Medicare within 12 months of first enrolling in Medicare Option 2. If you don't have any of those situations, you can still apply for a Medigap plan. The insurance company will just ask medical questions and they might charge more, but you can still apply. You are not automatically denied. The insurance company will review your health. Some companies are more lenient than others. Some will approve you at standard rates. Some will approve you at higher rates. Some might deny you. You won't know until you apply. Option 3. If you're stuck with an expensive Medigap plan and cannot switch, consider a high-deductible Plan G or Plan N. These plans have much lower premiums, sometimes 40 to 50% lower. The trade-off is you pay higher deductibles when you use healthcare, but if you're healthy and don't use much healthcare, you save money. This is a calculation you need to do with a professional. The National Council on Aging has free tools online to help you do this calculation. Here's what I need you to understand. This video is one moment in time. Rules change, dates change, deadlines change. You cannot and should not rely only on YouTube notification or random videos you find online. Senior policy information requires real-time updates. That's why I've created something specifically for people like you. When you join this channel, you get real-time alerts, immediate notifications when Medicare rules change, when Social Security deadlines approach, when insurance companies change coverage. The Senior Benefits Protection Guide, a free downloadable PDF that walks you through every major rule that affects your retirement. Social Security, Medicare, Medigap, pensions, bank rules, airport travel for seniors, everything. Monthly updates. Every month, I personally send out updates about changes to Social Security, Medicare, and retirement laws. Direct access to resources. Every alert includes direct links to official government websites, so you can verify information yourself. Most importantly, you're never relying on one source. Every piece of information I share includes official government links. You verify it yourself. You'll immediately get access to the Senior Benefits Protection Guide. No credit card, no ads, no spam. It's completely free. The link is in the description now. Why am I telling you to do this? Because Margaret, the 68-year-old from earlier, doesn't have time to watch another random video when her insurance plan increases next month. She needs real answers, real deadlines, real protections. And you need the same thing. One more thing before you go. If you're watching this and you're outside your 6-month Medigap window and you have health conditions, I want you to know you are not alone. Hundreds of thousands of seniors are in the same situation. Some insurance companies are more lenient. Some states do have additional protections. There are options. But you have to know the rules first. Join the WhatsApp channel. Download the guide. Learn your state's specific protections. Then take action. Don't wait until next year's premium increase hits. Don't wait until you need to switch plans and find out you're denied. Take action now. You spent your entire life working. You earned your benefits. You earned your security. These rules exist to protect you, but only if you know them. So learn them. Today, click the link in the description. Join the channel. Download the guide. I'm here for you. My name is Milena, and protecting your retirement is my mission. Falinero.